Interest and investment in clean energy has been steadily growing. In this video, we'll review the best clean energy ETFs to go green in your portfolio. Hey guys, John Williamson here, OptimizedPortfolio.com, investing and personal finance. Why clean energy? Development, innovation, interest, and investment in clean energy has been on the rise, with fossil fuels hopefully on the way out. Increasing energy demands from emerging markets around the globe will expedite the transition. Moreover, state and federal subsidies and tax credits will continue to accelerate the adoption of green energy initiatives. Think solar, wind, hydroelectric, geothermal, etc., as well as the tech that services those specific resources. Things like solar panel installations and electrical vehicle sales are at record highs. Diversification is important in investing in clean energy due to the fact that some of the underlying companies can easily go under. Here are the best clean energy ETFs to access diversified exposure to the market segment. First up is ICLN, the iShares Global Clean Energy ETF. ICLN, or iClean, is the most popular ETF in this space, with over $1.3 billion in assets. This fund provides broad global exposure to the clean energy market segment, with 31 companies involved in wind, solar, hydroelectric, and other alternative energy sources, as well as companies that provide clean energy tech. The fund is well diversified globally, with significant holdings in Canada, New Zealand, Hong Kong, Brazil, and more, with only about 40% in the United States. Its largest exposures are renewable energy equipment and services, electric utilities, and power producers. The fund seeks to track the S&P Global Clean Energy Index and has an expense ratio of 0.46%. Next up is PBW, the Invesco Wilder Hill Clean Energy ETF. This ETF is another popular broad clean energy ETF with comparatively more of a tech, industrial, and manufacturing focus than iClean, with less exposure to pure energy plays like utilities and power producers. While this fund's sector exposure can be considered broader than iClean, PBW's geographic exposure is less diverse, with its holdings almost entirely in the United States at 86% and China at 9%. The fund was established in 2005 and seeks to track the Wilder Hill Clean Energy Index. This ETF has 42 holdings and an expense ratio of 0.70%. Our third ETF is QCLN, or QClean, the First Trust NASDAQ Clean Edge Green Energy Index Fund. QCLN seeks to track the NASDAQ Clean Edge Green Energy Index. This ETF is even more tech-focused than PBW, investing in manufacturers, developers, distributors, and installers of materials, energy tech, energy storage and conversion, or renewable electricity production. The fund has 43 holdings and an expense ratio of 0.60%. Next on the list is PZD, the Invesco Clean Tech ETF. This ETF is an equal-weighted index of clean tech with more exposure to small caps, industrials, and technology. The fund seeks to track the Clean Tech Index and has an expense ratio of 0.68%. Next up is FAN, or FAN, the First Trust Global Wind Energy ETF. If you're interested in specifically targeting wind energy, FAN is the only ETF to provide that narrow exposure. The fund has 47 holdings diversified well across the globe and seeks to track the ISE Global Wind Energy Index. This ETF has an expense ratio of 0.62%. Our last ETF is ACES, or ACES, the Alps Clean Energy ETF. ACES seeks to track the CIBC Atlas Clean Energy Index, a market cap weighted index providing exposure to the clean energy sector in North America. The fund has 33 holdings across the United States at 75% and Canada at 25%. It has an expense ratio of 0.65%. All of these ETFs should be available at any major broker. My choice is M1 Finance. The broker has 0 trade commissions and 0 account fees and offers fractional shares, dynamic rebalancing, intuitive pie visualization, and a sleek, user-friendly interface and mobile app. I'll provide a link to my comprehensive review of M1. Some of the links below are referral links, at no additional cost to you if you choose to make a purchase or sign up for a service After clicking through those links, I may receive a small commission. This allows me to continue producing high-quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful. Also, please note that while I love diving into investing-related data and playing around with backtests, I am not a certified expert. I am not a financial advisor, portfolio manager, or accountant. This is not financial advice, investing advice, or tax advice. The information presented here is for informational purposes only. Investment products discussed are for illustrative purposes only. It is not a recommendation to buy, sell, or transact in any of the products mentioned. Do your own due diligence. If you found the information in this video helpful, consider liking, commenting, subscribing, and sharing. That would help me out and I'd greatly appreciate it. You might also enjoy some of my other videos. Here are a few.